This is Classic Business, Breakfast with Moneyweb, Arabile Gumede and Nastasia Aronsa on Classic 1027.
Jameel Ahmad, Global Head of Currency Strategy at FXTM, joins us on the line as we unpack some of the market movement with Martin Strauss, Director at ShareNet Johannesburg as well, joining us in studio. Jameel, let's kick things off with you. A lot happening across the globe, although at the same time, nothing happening.
Good morning. So yes, we thought that this week could be another tricky one for financial markets. I put it this way because of the emergence of a potential downturn in diplomatic tensions or relations actually between the Saudi Arabia and Turkey. Obviously, we saw this huge move in the Saudi Arabian market on Sunday, that things have relatively more calmed down since then, which has helped financial markets kind of brush away these tensions, at least for now. More positive news for the rand is that the rand strengthened again yesterday. It seems that the rand is carrying on the back of some improved momentum for the Turkish lira. Turkish lira has gained nearly 1.5% over the past 2 trading days, which is actually its strongest levels since the aftermath of the famous crisis in August. That's helped the South African rand, Russian ruble, and generally the currencies within the EMEA when it comes to emerging market FX.
Is it going to be sustainable, you reckon?
I think it's possible because if you look at what's going on with Turkey and Saudi Arabia, there seems to have been the opening of a formal investigation which shows there's a collaboration between both parties and that diplomatic relations are intact. I think what was more spooky for financial markets is that there could be more geopolitical risks. You've got already a very volatile external environment when you countering all different factors, but with this in the mix, that would have made things a little bit worse. But it seems that diplomacy is still working. We need to really see what the conclusion of this investigation is before deciding the next move. But it does appear that there's room for optimism that EMEA FX, so the South African rand, the ruble, the Turkish lira, they can continue to benefit over the near term at least.
One would find that the likes of the bond markets themselves would perhaps find a lot of weakness considering what's happened in the United States, those treasury yields as well going up quite significantly. But it does seem to be waning off somewhat, one would think.
Yeah, well, what happened since the U.S. Treasury yield, the 10-year, hit its highest level since 2011, this is around last Tuesday, there'd actually been some profit taken on the U.S. yield market, which provides some substance behind why the bond market hasn't suffered as much as you might think from a rise in U.S. Treasury yield. However, having said that, as long as the Federal Reserve continued to ignore President Trump's rhetoric when it comes to raising U.S. interest rates because he's been more outspoken, and as long as the Federal Reserve do maintain their view that U.S. interest rates will continue to move in a higher direction over the next 15 months or so, the U.S. Treasury yield should still continue to climb. 3.50%, 4% is possible by this time next year, I would say.
What keeps you up at night right now, Jameel? What's the one thing you perhaps will look at in the market and say, look, if that happens, I'm worried that it could blow out things?
There's no individual catalyst because it's very difficult to say what exactly is driving the markets. We do not like political risk and we do not like geopolitical risk because it's really dictated markets. And with this new era of populism and political risk, it's something that's encouraging investors to ignore traditional macro data. So this is why markets can be quite choppy and there can be a lot of volatility. I was concerned, I would not doubt this, that the Saudi Arabia-Turkey news from the end of last week was going to make this week a little bit more difficult, but so far things are contained.
Jameel, just very finally from you, towards the end of the years, one would hope that things get a little more volatile, but you'd hope that the volatility is in an upward direction. You see that being the case, perhaps, even if it's for the currency or global equities?
Let's see what happens with the U.S. midterm elections next month, because the U.S. midterm elections is not something that's really been spoken about when it comes to what could be priced in and what could not be priced in. And we're around 3 weeks away now from the event. So I wouldn't rule out that if there is a surprise with the midterm election, whether this is the Trump administration gets less power or whether it gets more power, that the markets might bite on that kind of headline. And I do still think we're going to have a busy end to 2018.
Interesting indeed to watch out for those elections actually out in the United States. Jameel Ahmad, appreciate your time there, Global Head of Currency Strategy at FXTM.